buyinghomeforeclosures.com, where it's no hype, it's just plain making money with investing in home foreclosures. Today, what I'm about to share to you is picking the right homeowner insurance. Homeowner insurance is very important in your investment process. If you don't take the right homeowner insurance, or if you're underinsured, or any calamities or incidents that you could have, you could lose that precious investment. So here's an interview that I have about to share to you of a great couple who is a part of my network, to share you more about homeowner insurance.
Hi.
Hello, and can you tell me a little bit about yourself, folks?
Well, I'm Teresa Heibel. This is my husband, Les Heibel. We've been in the insurance business for about 33 years. Les as an agent all those years, and I became an agent in 2001. We have an agency that sells for many different companies, homeowners, autos, businesses.
Well, let's say if I'm a brand new homeowner or would-be homeowners, what do you think are the things I need to know before shopping for a homeowner insurance?
Primarily, you need to choose an agent that you know is honest, that represents companies that are good rated companies. They have a rating-based system. You try to find an A-plus company. And the most important thing, I think, is have your information that you need to give to your agent on what you want. Know what you need. The agent can help you if you have the information on the house. Date it was built, square footage. It's much easier if you have all that on hand when you go and get a quote.
Well, how much homeowner insurance a homeowner really needs?
You've got to insure them for what it would cost to replace them. There are two types of policies. You can get an actual cash value policy, or you can get a replacement cost value policy. You're far better off with the replacement cost policy, and therefore you have to buy one that replaces the house. If it costs, as an example, it costs $120 a foot to replace that house, then you want to insure it for that much at least.
What's actually the difference between replacement cost and the actual cash value thing?
Actual cash value is based on a depreciated value of your house. If you've got a 200-year-old house, it's not going to be worth very much. If you've got a newer house, well, if it's been updated, then it's going to be worth what it would cost to replace it. If you could take that house and say, okay, here's the house, contractor come in and rebuild that house, that's the replacement cost of that house.
I know I have my separate primary homeowner insurance for my residence. Now, if I'm trying to invest or get a rental, is it always better to put the same coverage, my rental property, with my primary residence?
Normally, it's and it depends upon the situation, but normally it is less expensive to add a rental property to your primary insurance because of shared liability. Your liability cost is shared on the same policy. But in the case of an investment property, that's probably going to be termed. There are companies out there that write standalone rental and investment properties, and in some cases those are less expensive. It depends entirely on the situation.
What are some of the tips on how to make sure that you're not uninsured, whether it's your primary residence or rental or investment property?
Insurance companies have on their rating systems a thing called replacement cost estimator, where you actually go into the computer and fill in the criteria. Like I said, year built, square footage, roof type, heat type, garage, an actual description of the house. And then they automatically figure a replacement cost on there. They call it the replacement cost estimator. Insurance companies use that as a rating base when they give you the rate for how much the policy is going to cost. Your very best advice is insure to value. Insure that house for what it's worth. A lot of people want to underinsure because say you got a great buy on the property. You know, you got this property for $50,000, but the replacement cost on it's $150,000. If you underinsure, if you have a loss on even part of that property, like if you have it insured for 50% of its value and the kitchen burns down, they're only going to pay for 50% of that loss because your house is insured only to 50% of the value. So always insure to value.
Okay, and any tips on how to save on homeowners insurance, whether it's primary or rental property?
Have good credit.
Yeah,
Credit is a big rating criteria. Age is something else that they you know, that you can't change. But as far as value is, shopping is good. We have several companies that we sell homeowners through, and depending on the criteria for that certain property, one company will be better than another.
You got anything to add there, Mr. Hyde?
No, I think she pretty well said it. You've got to have the credit. Your age makes some difference, not as much as the credit makes. But shop around. You know, you can find better coverages if you look around.
Okay. Well, for the last time is if folks have any question, where are you guys located? What's your number?
We're right in the middle of Fallon, Nevada, on Williams Avenue, half a block east of the Rite Aid store. Our phone number is 775-423-7997.
Thank you very much.
Thank you.
Thank you.